Hey everyone, it's Daniel here from InfoRest. Hope you're all doing well. So BlackRock came out and basically said the markets are completely pricing it all wrong. Rate cuts are not coming anytime soon. You have the markets pricing in some sort of rate cut probability or a high probability or a good chance of a rate cut in July and a chance of seeing about 80 basis points of rate cuts this year. Now that means that rate cuts should probably start in the summer, July at least, to get that such a substantial move. But BlackRock again saying that that's completely wrong, the market's completely wrong. So who's right in this scenario? Well, the question is going to come down to two things really. It's going to come down to data. It's going to come down to how this crisis or banking crisis unfolds. If there's some sort of black swan event, is there going to be something that shows up that ends up being a very big problem for the economy? Could it be the shadow banking, the commercial real estate, etc., etc.? It will have to depend on that. So if we're going to get rate cuts, and let's not forget, right, if we're pricing aggressive rate cuts this year, and we're pricing it that it's going to come soon, right? The markets, when I say we, I'm talking about the markets pricing in that we're going to see some sort of rate cuts very soon, then that tells you something. That sure, you may think that's an optimistic sign, that's a good sign, should be good for equities, should be good for, the economy and etc. But medium, long term, sure, it may be good. But short term, in terms of what's to come next due to the rate cuts, is because something has broken. Something would have been completely washed out, broken in the economy, the unemployment rate basically skyrocketing, the jobs, the growth numbers coming in worse than expected. Now we do have, finally heading into April, another fresh month of new data coming in. Are we going to start seeing the data start to become weaker and start to deteriorate further on? Because the data is still holding up. It's quite resilient in my opinion. We still have yet to see really true weakness in the data, in the economy, in the markets. Now the question is, if the data, and especially the inflation data, is lagging and it's not real time, although you may see it elsewhere in shelter or rent and so on, but in terms of the CPI report and the other macroeconomic metrics out there, the macro data out there, if it's not real time and it's delaying, then does that mean that the Fed is completely looking at the wrong area? And does that mean that the Fed could continue to tighten harder? Which means what? Which means that eventually something's going to break. And then yes, probably the rate cuts will come in. But if the data continues to show strength and resilience, because nothing has broken yet, and the data continues to be as is, and you see the data, coming in stronger than expected, then the markets are not going to like that, because it's going to give the Fed the green light to continue to tighten. So it does make sense when BlackRock comes out that the markets may be pricing that rate cuts coming in early may be a wrong thinking. And it's too early to be thinking that until or unless something truly breaks. Now, you could say, hey, Daniel, something already broke. I know, we understand that. The banking sector, the regional banking sector, and the small banks that are going under, along with Credit Suisse and the next one and the next one that will come sooner or later, or maybe in a different sector. We understand that the cracks are there and something has broken, but again, the magnitude of it, the contagion effect, the true effect similar to the GFC, may not be exactly the same, but similar to it, just like in previous crises, We have yet to see the true magnitude and true impact of that on the data, the unemployment rate, the job losses, the fact that companies need to go out and fire workers, right? When that starts to happen, and we start to see now the non-farm payrolls, the jobs data, the growth data, the GDP numbers start to come in really, really, really weak, it will show that yes, this data is a result of because something has broken and got worse off, right? So yes, something has broken, but we're not at the worse off stage. So it's like a slow moving ship that's taking its time, and eventually, yes, something's gonna break, and then eventually, yeah, the Fed's going to come up with new tools, new words, new lingos, new type of QEs, rate cuts, etc., and then, looking forward, the markets will be fine and they will be able to make an all-time high in the future, right? But as of right now, pricing in that, okay, rate cuts got to come in. No, not necessarily, especially if this regional bank issue, the banking crisis, if it starts to die out from the news and from the panic and the fear that everyone's feeling, and that kind of just subsides and goes away, then that gives the green light for the Fed to do a 25 basis point rate hike in May. And I think, gun to my head, if nothing breaks, right? If you were to ask me, Daniel, if nothing breaks by May, the data is either in line or resilient, could we see a rate hike in May? I think that's possible. And I think very likely to happen, especially if the data shows the resilience and this whole banking crisis is out of it and we no longer are reporting on it, right? Which then, if we get a 25 in May, of course, it will cause some more fears in the stock market, wondering, okay, what's going to happen next with who's the next, what's the next industry that's going to topple and what's going to get worse off. And again, if May still ends up being, a good month, you got June, July, who knows how much more tight the Fed could go. And we've always heard and seen in history, the Fed always continues to tighten things until something breaks. So I don't quite disagree with BlackRock here saying that rate cuts, that markets are completely getting this wrong in terms of rate cuts. I do agree that, pricing in rate cuts really early on and aggressive would mean that something is going to probably break really fast, really hard, which is still a possibility. But saying that, you're predicting this to happen very soon would be the reason why you would think rate cuts to come in. So I would say no rate cuts until we can define and see the true break. When finally the cracks end up just breaking the whole wall, and you have a contagion effect, and just basically, excuse my language, but the shit hits the fan. And finally, yes, the Fed will come to save the day as they have always in the past. So let me know what you guys think. Leave a comment below, subscribe, hit the like button, the bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.